You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 7/27/21. Well, you're probably a little bit nervous about the stock market. Has it hit its peak? It keeps hitting all-time new peaks and keeps going higher. Can that go on forever? That's probably the question you're asking. It's a question I've been asking for years. And so far, the answer has been yes. But at some point, the answer is going to be no. I'd like to know what investment alternatives you are exploring other than putting your money in the market. We know precious metals, cryptos, real estate. Tell us, send us an email to kl@kerrylutz.com. Well, in the meantime, there are options, high-yielding options that have a relative degree of safety. Obviously, the higher your return, the higher the risk is going to be. So you have to look at the underlying opportunity and figure out whether the risk is worth the reward. And right now with me is Heather Dreves. And her organization is Secured Investment Corp, and you find them at securedinvestmentcorp.com. Heather, looking at your site, you got 3 funds that I see here, and they're all offering pretty high yields. Somewhere between 6 to 12%. How do you do this?
Yeah, well, first, thank you for having me. It's an honor to be a guest on your podcast. We do have multiple opportunities for alternative investments. We know that there's great opportunity out there in the stock market and crypto, but we are firm believers in investing in what we know and practicing what we preach. So we focus around real estate and specifically around residential real estate. So we're not a commercial lender. We're not investing in storage units at this time. Not that there's not a lot of opportunity, but our expertise is in the residential space. And so, as a organization and as a fund management team, we believe strongly to have options out there. It's important to always diversify your portfolio, whether you're doing that through the stock market or through real estate. And we currently manage 2 real estate funds. We have a fund specifically for accredited high net worth individuals that has been in existence for over 8 years. And it is extremely a well-oiled machine is what I like to call it. And it's an opportunity for accredited investors to deploy capital into a real estate fund that's not publicly traded. It is privately managed. And it has consistently yielded over the last 8 years, every year, 10 to 11%. So it is a very consistent cash flowing fund. What we found as a organization and as a fund management team is we felt like we were doing a huge disservice to the general public, that they didn't have that opportunity to create wealth for themselves. We appreciate and are thankful for the accredited investors that we've dealt with, in the past and continue to work with. But we felt like the everyday Joe should be able to participate in that. And so as a company and as a team 3 years ago, we ventured out into opening what's considered a Regulation A+ fund. And this is a fund that's highly regulated by the SEC. And really what it means to most people is that anybody can invest in it. And so you don't have to have high net worth. You don't have to have over $1 million in assets or, qualify through the annual income standards. And we have a fund now that is open to everybody with a very low minimum, $1,000. And that probably doesn't sound like a lot to a lot of people, but what I tell people is you're never going to get to your financial goals, create wealth for yourself unless you start somewhere. And so this fund has given us the opportunity to be able to offer that. And again, it is a real estate fund that is all backed by residential real estate assets. And then the third option we have is for people to purchase what are called trust deeds or first lien position notes. We have a lot of clients, investors that like that type of an investment alternative also. So those essentially are the 3 options that we do offer here at Secured Investment Corp.
Okay. And so Obviously, you're investing in real estate debt, effectively, mortgages, deeds of trust, whatever you call them these days. I'm sure there's other names I can't think of right now. So are you doing this on a onesie, twosie basis? How do you find these mortgages that you're investing in?
That's a really good question. So our company also educates real estate investors that are looking to start investing in real estate. And that's, through multiple strategies. We educate people on how to buy properties to fix and flip. Essentially they're rehabbing them, creating equity and selling them and making money. Or maybe it's a buy and hold strategy. But a lot of our lead flow comes from those clients that are looking for funding for that. So one of the things with our funds is we do diversify our funds. So 75% of our fund balances are held in these trustees, or some people call them notes. There's probably 10 different things that you can call them, but essentially they are liens against a property. The funds generate income because we require our borrowers to make monthly interest payments. And that's a form of income that comes into these funds. The funds also generate income off of origination points. We charge our borrowers a set origination point fee, and that's another stream of income that comes into them. The other 25% of our fund balances, and this is done just locally. We're located in beautiful Coeur d'Alene, Idaho. I feel very fortunate to say I'm from here. But for any of you that read the Wall Street Journal, I think just about 2 or 3 months ago was the #1 place to live in the United States. Spokane was 5th. So those are actually the two areas. And we did this before that article came out. We buy real estate in those two markets. And we have an acquisition team that identifies these properties. We mainly buy them for short term. We'll go in, buy them, fix them up, and flip them. And those profits go back into the fund. So that's how the fund members make money. There's different streams of income. Again, we diversify those funds so that we always have these different streams of income. If our origination team is a little slower one month, we can always step it up with real estate and vice versa. And that's where those assets are held within those funds, is in the residential real estate space.
Uh-huh. And what's been your default rate on these mortgages that you're buying?
So we actually have a very low default rate. We service all the notes internally. We have a servicing company. Right now, we service about 500 notes or trust deeds. And our default rate sits at about 1% to 2%. What people don't take into consideration is these trust deeds that we originate and service, there is a lot of equity in these. We don't extend more than 70% of the value of the property, which means that these borrowers have a vested interest, right? They know that in the case that they get into trouble and they even consider walking away, they're leaving a lot of cash on the table. So typically our borrowers are much more motivated to continue making their payments. And we're very, on top of them. If we even see them hiccup, it's a phone call. Hey, what can we do to help you be successful? Let's get you back on track. So default sits at about 1% to 2%. It's very low.
Mm-hmm. Interesting. So your borrowers have a lot of skin in the game. And as we know from the foreclosure crisis, the more skin in the game you have, even if the property goes upside down, the more likely you are to keep that property in hopes of better days ahead. So what's the average loan size that you're making?
Don't just survive, thrive. The Financial Survival Network.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beatty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful, it's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Ross Beatty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, I think that's a valid question and a good point to bring up, because I don't know about you, but when things are like they are and things are good right now, right? Markets are up, real estate's at an all-time high. People start thinking about back to 2007, 2008, are we going to have another crash? Where we saw a lot of that those markets affected were in very high-end homes, jumbo home loans. Just to point out, we don't lend above the FHA cap. So these properties that we're lending money against, or even buying for that matter, are most of the time more first-time home buyer homes. So our average loan size is about $130,000. And if you're from California, people are saying that are these people crazy? But there's a lot more opportunity.
That'll buy you a parking space in San Francisco, right?
Yeah.
I mean, seriously. Yeah. But obviously they're non-conforming loans, right? They're not FHA.
We don't do any owner-occupied financing. So these,
right,
whether we're buying property or we're lending the money from the fund, it is all based around non-owner occupied investment properties only.
Okay, so what's your underwriting process look like? It must be relatively quick because you get an appraisal, that the person's got a minimum of 30% equity. Credit's a concern because you don't want to loan to a deadbeat, obviously. But once you get past those two things, then these are, hey, if only the government were making mortgages this safe, we could all breathe a sigh of relief, right?
Yeah. Well, and the other thing that, I think, in all honesty, I think private money kind of gets a bad name out there. A lot of people call it hard money. And then you hear people, make reference, well, that's predatory lending. I mean, the reality is, especially here at our company, is we want our borrowers to be as successful as I want my fund members to be. I want my borrowers to make money, and come back to us. We want that repeat borrower coming to us. And so we do have a set of guidelines or a credit box. We want to make sure, like you said, they're not a deadbeat. We're not, credit score driven. But if I look at someone's credit and I say, hey, this guy's got 650 and he had a hiccup years ago, or he's got 650, but he never pays anybody, that's two different clients, right? The likeliness of the guy that never pays anybody on time paying us on time is pretty unlikely. So the story, I call it storybook lending. What's the story? What's the borrower's story? How are they going to be successful? Do they have experience? Do they have other streams of income? All those things matter. And then the biggest part is, what's the equity position in the property? So like you said, an appraisal, that's going to identify what the value of the property is. We're a nationwide lender, so it's impossible for us to have boots on the ground in every single state. So we do, rely on a third party evaluation. We always get full title. We make sure that our borrowers have at least three months of payment reserves. And then if they are doing a rehab project, they have to have 10% of their rehab budget, because we only reimburse them for work done and materials bought. We don't front any costs for that. And so, again, we want to make sure we're putting them in a good position. We want that borrower to be successful.
Yeah, I gotcha. And what kind of rates are you getting?
I would say our average loan rate that we're charging a borrower is probably 10% interest rate, 1 origination point. Like you mentioned at the beginning of the podcast, the higher the reward, the higher the risk. So someone with not as strong credit, maybe not as much experience, they're going to get charged a little bit higher rate than your guy that's done multiple deals, cash in the bank, maybe already borrowed from us.
Yeah. So these are investor loans. This is what Robert Kiyosaki would refer to as good debt, right?
Yep, absolutely.
You're using it, like you said, for a flip or whatever, so they leverage up a little bit and they can do more flips and make more money. And it makes a lot of sense. And I think we tried to poke enough holes in your in your presentation for one session here, but we do appreciate your coming on and explaining it to us. If you want to find out more, how do we contact you? How do we connect with you on the web or otherwise, Heather?
Absolutely. So you can always visit our website at securedinvestmentcorp.com. There's information on there about our funds. If somebody's looking to just passively invest instead of being an active real estate investor, there's also information about our trust deeds that we sell if you're a little more active, involved investor and you like, hedging the bet that you might get a property back. Trust deeds are a great investment tool also. The other thing to mention is we're very, very educated about working with small balance IRAs and 401ks. So if you are someone that has these small balance IRAs that are in a self-directed status, I'd say 90% of our clients that passively invest money with us use self-directed accounts of some kind. We're very well versed at giving you information about that and even steering you in the right direction if you need a self-directed custodian. So visit our website, securedinvestmentcorp.com. You can schedule a call with myself or someone from my team, and we'd love to give you, more information about what we have to offer, more from a passive investment side of the business.
Yeah, and since it's passive gains, you can use your passive losses to offset them, which can work quite well for real estate investors and other investors. So it sounds like it could have good potential and really work in a tax advantaged way. If you plan things right, you need to talk to your accountant, tax lawyer, and tax guru about that for sure. Hey, if you got a question for Heather, and I'm sure you do, just send me an email to kl@kerrylutz.com. I'll get it over to her and we'll get you an answer. Anything else, just send me an email and make sure you sign up for our free newsletter at financialsurvivalnetwork.com. Heather, pleasure connecting with you here, and we'll look forward to touching base with you again in the months ahead and see how things are going in a very challenging environment.
Yes. Thank you for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.